The broadcast is now starting. All attendees are in listen-only mode.
Hey everyone, David here, Day Trade Like a Pro. We're just all gathering, so we'll probably just give it a minute or two for the stragglers to come on and we'll kick it off. So sit tight for just a minute. We'll be on it right back on.
No, I don't know what I just did here. Chat.
All right, well, why don't we kick it off here? Again, David, Day Trade Like a Pro. We are Justin, who most of you know in the Discord room is JTrader, going to be leading the training today. Today's training is the second in call it a 4-part series that we're doing for many of the people that joined us for trials for the NinjaTrader webinar, but we're making this available to all of our members, obviously. Justin has designed a very robust system leveraging prediction points and RVI. That's a proven system that he's been trading for years and he's perfected it. He actually did a course about a month and a half ago now to teach everyone on that. Actually, let me just check real quick. Can everyone hear me? I'm hearing. Okay, so it sounds like my mic isn't great, but it sounds like people can at least hear me. So good thing I'm not speaking for too long. Anyway, so Justin did a course on his methodology about a month and a half ago. There's going to be an opportunity to sign up for that course at the end if you're interested. But today's training is Justin's going to walk you through and teach you what his methodology is. And then also, many of you know that Justin runs a live trade room that focuses on the ES, which is live charts up, calling trades out, calling levels out, and call it, basically live coaching on the markets every single day that we're going to provide some access to as well. So with that, I'm going to pass it off to Justin and let you go from there.
Great. Thank you, David. Appreciate the intro there. I'm really excited to get started here. We don't have a lot of time, so I'm going to try to get through all this. First of all, I do want to thank Day Trade Like a Pro, Ephraim and Dave for giving me this opportunity and a platform to share my trading system and to run the trade room. And of course, I want to thank everyone for taking some time out of their day to spend it with us here. I don't think you're going to be disappointed because I have a lot of valuable trading information to share with you that it's actionable. You could use right into the Globex, applicable pretty much on any platform or any strategy that you use. And so if you stick around till the end, we do have a great freebie to offer everyone. That's going to be a nice trial of the trade room that I run every morning. So today what I want to do is I want to share my trading system with you and kind of break it down into its parts such that after today, you should have a good idea of how I trade, and hopefully you can take some of the concepts and use them to help improve your trading. And then in the second part of the presentation, I'm going to take some time to share with you what we do in the ES Live trade room every morning. So essentially, we're just taking the JTF trading system that I'm going to show you and using it to forecast the market and trade the setups in a live setting. So I really believe it's one of the most beneficial ways to learn how to trade, how to apply a system, and really gives you an opportunity to see how you can trade on a live setting with somebody who knows what he's doing, or at least thinks he knows what he's doing. So let's go ahead and get started here. Of course, we do have the obligatory disclaimer. There's a high degree of risk involved in all kinds of trading. Past results aren't indicative of future results, all that kind of fun stuff. If you want to, we're going to send the webinar out after, so you will have an opportunity to come back through and read through all the disclaimer. It's really interesting stuff. So you can take the time then to take a look at that. So for those who are not familiar with me, you're probably wondering what JTF is, and really it just stands for J Trader Futures. My handle on the Day Trade Like a Pro community is J Trader, and some of you are probably familiar with my presence on social media as J Trader. And so I also have a trading company of my own called JT Futures, and so that's just where that JTF comes from. So the system is pretty straightforward, but it does have a number of different working parts. And there are three main pillars to the trading system. So first and foremost, we have just straight price action. And really, I think price action is the most important thing that you should be able to understand as a trader. So if you're new to trading, or maybe you've been trading for a while and you're having trouble, try to go back to the basics and just focus on the concepts that are within price action. So when I say price action, I'm talking about support and resistance, Fibonacci's. I'm looking at the trend based on highs and lows, and then what the candlesticks are telling me on the chart. And so with this alone, really, if you could get these concepts, you could become a successful trader. Of course, it gets difficult, and we'll get into why you might not want to rely just on support and resistance or fibs. But that is really, in my opinion, the most important thing to learn as a trader. Now, the second pillar of the trading system is an indicator. And this indicator is really the only indicator I have on my time charts. There is a bit of a caveat to that, because those who are in my trade room know that on my tick chart, I do have a moving average. And so outside of that, if all my time charts from the 1 minute all the way up to the 3 month, the quarterly chart, all it has on it is relative volatility index. And that's really all I use. Now, relative volatility index is pretty much the same thing as relative strength index. So if you're using RSI right now, all these concepts are going to be directly applicable to your RSI. And they both measure the direction of volatility in the market, and they're both the same exact equation or calculation to get the indicator plot on your chart. The only difference is that RVI is using the standard deviation of price change rather than the absolute price change, which is what the RSI uses. Now, I'm using RVI, using range rules, which we'll get into to a lesser extent, but for the most part, I'm using RVI to identify divergence. Now, some of you probably are familiar or use other indicators, such as some type of stochastics, probably some cumulative delta for any of those out there looking at volume and things like that, and trading order flow. And so this idea of divergence can be applicable to a number of different indicators. But for me, I've been using RVI for years and years now, and my eyes are particularly attuned to it. And so that's really what I've settled on as a trader, and is what my system really originally started with, was just looking at RVI and just looking at some price action to look for trades. Now, the divergences are particularly very powerful because of the indications that you get in terms of exhaustion in the market. It'll tell you potential continuations in the market. And then if you start using multi-time frame analysis, you can then start identifying reversals in the market and forecasting moves. You can tell if a move's going to move maybe 5 or 10 points, or if it's going to move for a much more significant push. And we'll get into those larger market reversals here as we go on with the presentation. Now, the third pillar, I will bring it up here in just a second, but just want to point out that I started out looking just at RVI pretty much on a chart for my entries. And I was trading the S&P 500 futures, which is what the system really has been used on. I've been trading that for like 4 ticks, 8 tick targets, and really had a hard time holding for larger targets. And so about a little over a year and a half now, I met Ephraim, and Ephraim was mentoring me, and he suggested that I go ahead and put these prediction points on my chart. And so at the time, they are specific levels in the market, and we'll get into the definition. But at the time, I personally was a little skeptical, only because I had support and resistance levels, I had fibs, and so I wasn't sure what the point was of having these levels on my chart. But I soon found out after the first day of looking at them that they were incredible. The way the market went to the prediction points, the way the market reacted when we were at the prediction points, and just the overall kind of layout that they made for the day. And so these prediction points, I think most people in this webinar are familiar because they're coming over from Day Trade Like a Pro. But for anyone that does not know, they are proprietary levels that indicate areas in the market that have a high probability of reaction. And if you watch them for just a day or a few days, you'll see what I'm talking about. So I started using these levels, and I started having more confidence in looking for these larger targets. So if I got in on an entry, maybe using like a confluence of my divergence with a prediction point, I then had confidence to hold for that, say, 10-point or maybe even a 15-point target, because the prediction point was there. And I've seen reliably time and time again how price will react at a prediction point and push directly to the next prediction point. And we'll go through some examples throughout the presentation. And so I'm using these levels not only for targets and entries on the market, but for an overall context and for building a roadmap for the day. So if I see that if I see before the market even opens these levels, then I can have what I like to call kind of a roadmap for the day. Now, what I'm all about is confluence. So when I start getting confluence between prediction points and divergences, and then maybe a fib or a support and resistance level, everything's lining up. That's where we get this really strong power. And just with the prediction points and the RVI alone, can really nail the entries with less than 2 points of risk on the S&P 500, which would probably be close to like 8 points if you're looking at the NASDAQ. And these then push for anywhere from a few points to sometimes, believe it or not, 200 plus points. And we'll get into some of those examples today as well. So the confluence between all three of them being their own powerful systems alone, really is what gives this system a lot of power. So what I want to do really quickly is go to the charts and just show you what I mean by support and resistance, what I mean by fibs, how I draw them. And for some of you, you might have seen my webinars from, I don't know, a month and a half, 2 months ago, where I kind of went over my trading system and did a similar type of presentation. So for those that have not seen the webinar, which I'm guessing will be a large percentage of you, I'm just going to go through and show you how I identify these support and resistance levels. So where's a good example? So I guess this would be a good start over here. We had this area in the market, and what a support and resistance level is for those who are really new. I know this is probably very basic information for a lot of people who have already been trading, but for those who are new, a support and resistance level is a level in the market where the price has trouble breaking through. So if the market is moving upward from a lower price to a higher price and it has resistance and it cannot break through, that's okay. I just said it. That's resistance in the market. So right here, you can see, you go ahead and mark it. We came up to around 37.63 and could not break through, pulled back, and then it ended up working as resistance again. Now, the opposite side of resistance is when you have price coming from higher prices down to lower prices, and then it has difficulty breaking that level from above. And so that then becomes what we call support. So here you can see we had resistance in the market around 37.63. And then when price came back to that level, we then had support there that for 4 tests here, it could not really break through that area. And so that's kind of how I'm identifying these support and resistance levels. You can see even back here, we had this nice resistance here around 37.37. Some trouble here breaking through, and then it eventually did. Now it got a little messy, but eventually it became support again. You can see then it was support again after it was resistance back here. And you can go all the way forwards, and a lot of times these will then end up acting as support and resistance all the way into the future. And so these levels are definitely powerful. The problem with the levels is you start, and you can see here, we have some resistance in the market here, ends up becoming support there, ends up becoming resistance again here, pretty much support there, and then all the way in the future here, pretty good support there. So you can see how they work. Now the problem is you're going to have a lot of lines. You have a little resistance there, right? You have some resistance here, you have resistance up at the top here. And so these levels, you have so many of them built up. The question then becomes, well, which ones are going to be relevant when price then starts coming back down? Because you can see sometimes, in this case, actually every level worked out great, but sometimes they break through. So it acted as support, acted as support. This one basically acted as support, broke through just a little bit. But sometimes you'll see them just go all the way through, and it's tough to find which levels are relevant when you have so many of them. Not only that, this is a 60-minute chart, an hour chart. When you dial down to a minute chart, a 5-minute chart, you're going to have a lot of these levels. So that's the only real drawback that I find with just trading support and resistance. And so that's why I start to bring in other things. Now we have Fibonacci's. And for those that are new who have never really worked with Fibonacci's, it's really just a fancy word for a retracement, or in other words, when you have price move, say, from a level here down to a level here, how much does it actually retrace that push from that high to that low? Now, there's a way to define this push, and we typically will just call this a leg. So we've got a leg from the high up here down to the low here. And from, if you were to kind of look at it from a textbook point of view, if you wanted to define the leg, what you need to have is a candle pushing to an ultimate high in that area, and then the subsequent candles need to break the low of the high of the candle that made the high, so that you get a hook. So you can clearly see there's a hook on the top end, and then we get to the bottom, we have this candle that makes a low, and then the next candle then breaks above. Now we have a hook on the top end, and we have a hook on the bottom end. And so that now becomes a leg. So what you would do for your Fibonacci retracement is, I think pretty much every single trading platform is going to have this tool. It's called the Fibonacci retracement. And so what you do is you draw, if it's going down, you would draw from the top to the bottom, and it gives you a number of key areas. Now you could define these areas on your own, but it just so happens that 38.2, 50, and 61.8% retracement levels are extremely reliable levels to look for potential trade entries or looking for projections of where you can expect price to push from when it bounces off the bottom of the leg. And so in this example, remember this is an hour chart, you can see that price came up from the bottom of the leg and reacted directly at the 38, pulled back, kind of bounced around in the area, but when it finally broke up, we then found resistance again at the 50, had a pullback, and then came ultimately all the way to the 61, had a little bit of a test of that area, and then pulled back. And so that's why these three levels are so important, because no matter where you look, in fact, I'll get into this really quickly, almost every leg is going to have these kind of reactions at those levels. So remember I said to define a leg, we have the curve at the top, curve at the bottom. And so you can see these legs everywhere. You have little micro legs in here, you have the bigger legs. And so you can see here that you've got a leg from this low to this high here. And look what happens off of that curve, the top of the leg right there. You have a pullback directly to the 38. It bounces, pulls all the way back, bounces at the 50, pushes again, comes all the way down, and ultimately bounces just in front of that 61.8, and then pushes up. And you can see we pretty much got a reaction. You can see the bodies of these candles right up to that 27 extension of this leg. And so these levels that I have on here right now are typically the most relevant that I've seen over the years that I've been trading. In fact, it pretty much pushed all the way to that 61. So before price ever even got up there, we did have somewhat of an idea of where it could potentially go. And then again, these legs are everywhere. You have a little curve here down to here. So it gets a little tricky. And I've had a number of people in my course who have a lot of trouble trying to figure out, well, which legs do I use? Because we've got a small leg here, but then look, we have the whole leg from here all the way up. And it just so happens that this leg all the way up had a pullback right into that 50-61 area and then extended right up into this area. And so it gets a little tricky if you're new to it on how you draw them, when you draw them, when you redraw them. And so that's why we're going to kind of segue into prediction points. But what I do want to point out here is that when you have support and resistance and you have fibs, you can then try to line them all up with the levels. So in this case here, you can see the largest leg that we can see on the screen is from the major low all the way up to at least the major high for this time period. And what ended up happening is price pulled back and we got a reaction right here, pretty much a tick in front of the 50%, but it also happened to be right in line with that support and resistance level that we marked. Look, at each of these lines is a day. So literally, 15, 18 days before we had the level, now we had a fib that also lined up, and the market just so happened to react right off that level and continue to push up. In fact, it almost pushed right to the 27 extension here. And so you can see how powerful these are. But again, you're going to have numbers of different legs kind of all over the place. In fact, you can measure little small ones. And so that's why for a lot of people, it kind of gets messy. You've got this, and then remember, you have all these other support and resistance levels that I haven't marked just because I'm trying to be quick in this presentation. Wrong button. So you do have all these different support and resistance levels, and so it gets tricky. Lots of support and resistance, lots of fibs. The great part about the prediction points is it takes all of that ambiguity out of where you should draw them and which ones are going to be important, and it basically just gives you the most important support and resistance levels in the market. So I thought I had them loaded on here, and it might be that I'm not sure why they're not on here. They should be there. I had the prediction points on the chart here so that we could take a look at least at the CPs and just go ahead and maybe they were hidden. No, I don't know what's happening here. But the prediction points themselves are going to give you pretty much the most important support and resistance levels in the market. And the great part about them is that um, I watch these every day, and I will watch and I will see a leg form, and I'll go ahead and I'll draw a Fibonacci for the leg, and the 38, the 50, and or the 61 will end up being a prediction point. So there's really at the end of the day, the support and resistance and the fibs end up becoming kind of obsolete when you put the prediction points on the chart. And this is like a mystery right now. I cannot figure out. I've got them shown and I don't see them. But we'll see plenty of examples. I've got plenty of examples to share with you. But I just wanted to kind of show you how I go about identifying the support and resistance levels, how I go about drawing fibs, and what the most important levels on the fibs are. And now you'll notice at the bottom of the screen here, I have my RVI indicator. Now this indicator, it's basically the stock indicator that you get on NinjaTrader. There are some trading platforms out there that unfortunately do not have RVI, Relative Volatility Index. And I should point out that there's another indicator that's called RVI, but it's Relative Vigor Index, and it's a completely different thing. I'm not even sure if you can apply divergence or anything to that. But this is the stock RVI indicator on NinjaTrader. I do know that they have it on a number of other platforms, including Thinkorswim. I think even Stage 5, which is a smaller futures broker and stuff like that. So if you do not have RVI, you can't find a custom script. Remember I said that you can pretty much use RSI and apply all the same concepts. So you'll notice that on this indicator, the only difference between the indicator I use and the custom or the stock indicator on NinjaTrader is that I put some key levels here on the indicator. And so what you'll find with a lot of I hate to say it, but people that are maybe a little bit ignorant of how oscillators work, a lot of people will say that when you get to the 80 on RSI, or in my case, my RVI, that means it's time to sell because the market is overbought and it's going to go down from there. On the other side, if you have the indicator come all the way down to the 20 or break the 20 and go even lower, some of these more ignorant traders will say, "Oh, it's time to buy. It's oversold, and the market's going to go up." And that really couldn't be further from the truth. There are a number of well-known market analysts who have been trading oscillators and RSI specifically, and they've discovered, and there's books written about this, there's people who have entire trading methodologies using these range rules. What they've discovered is that if the market is holding above this green 40 line and kind of oscillating between 40 and 80, and remember, it's a range. You can see it push just a little below, again, up in the 80, push just a little above, even go all the way up to 95, 100. I haven't seen that before. But if you're holding 40 and you're coming up into the 80 range, that's telling you that you're in a strong bull market. And so rather than looking for shorts, what you want to start looking for are longs off of the lows of price. So if you take anything away from the presentation today, at least take this concept, because I'm telling you, this is really going to help your trading if you're using one of these oscillators. Now, again, on the inverse of that, if you're holding below this red 60 line, and then you're bouncing kind of between right around 60, 65, all the way down to the 20 area, maybe down to 10, 15 at extremes, it's telling you that the market is actually fairly bearish. And so that means it's time to start looking for shorts off of the highs in price. And so I don't necessarily use this for like a trade entry, but I am kind of paying attention to the overall range rules when I'm building my bias and things like that. The main reason that I am using RVI is, like I said, for those divergent signals. And so I'm just looking for price to do something opposite of what the indicator is doing. And you're going to have a number of different kind of setups. You're going to see that in a push up, you're going to have setups telling you to take it against the momentum of where you're going. You're going to see setups that are telling you to take it in the direction of the momentum of what's happening in the market. And so you really have to take the market context into consideration for a lot of these setups. Because remember, when I talked about the 3 pillars of my system, the RVI is going to tell you where there's exhaustion, where there's continuation, and where there's going to be overall reversals. So exhaustion just means, here's a great example. We have this push off of 38.42, pushes all the way up here, and then we get a short signal if we're just looking at RVI. Now, what that's telling me, as an analyst who's been spending a lot of time watching this does not mean we're going to reverse, unless we take into a number of other things, which I can't get into right now. But it's telling us that there's some exhaustion in the push up. And really all you can expect from that is somewhat of a pullback. Sometimes it'll be just a small correction of a few points. Sometimes it'll be just a little bit more exaggerated. But overall, it's telling you that there's exhaustion. It's not telling you that the market's going to completely reverse. On the flip side of that, I'm also going to get signals like you see off the bottoms of price in this push up. Now, these what I call continuation patterns will show up on the bottoms of price in an uptrend. And then if you're in a downtrend, they're going to show up on the tops of price. So as price starts coming down here on the left-hand side of the chart, these continuation patterns you're going to see off the highs, telling you that the market should continue in the direction that it's going. And so this is how I'm using the RVI divergences to help pinpoint my entries. So I might have a beautiful confluence in this area with some support and resistance, a nice prediction point lining up right there, and then I get this continuation pattern off the low looking at divergence, giving me a lot of confidence that from this area we should keep going. And not only that, have an entry in the market that literally for me takes on less than 2 points of risk on the ES. Now, a lot of times these entries take on just a few ticks of risk, and then they can push for what end up happening, at least in this market right now, 200, 300 point pushes. And I'm not joking. Sometimes you get an entry with less than a point of risk, and it goes for 20, 30, 40, 50 points or more. So I'm going to jump back to the presentation now, and I want to start looking at some of the other things. And so here, not sure how to advance. So here's just one great example where I have confluence, and you see that green arrow on the chart here. This was Monday. And so Monday we had the prediction points on the chart, and then I just kind of built up a case here for a trade, which we actually did alert everyone in my trade room to take it long off that KP, that prediction point right here. And the reason for that is because we had a confluence of a Fibonacci retracement for this specific small leg here. We had the prediction point, and then if you see this price pushing up, but the indicator pushing way down, we had a beautiful continuation pattern to take it long. And from that point, that was really the only trade you had to take. The market opened here, where this blue line is down here, pushed, pulled back, and right after the open, like 10, 15 minutes in, you got your entry and you were basically done for the day. All you had to do was kind of nurse your trade. Now here's another example, right kind of in between the prediction points, where you have previous resistance in the market that pushed, remember, back at the beginning of the day, got the pullback, but then when we pushed up to this level and pulled back, we ended up getting a nice reaction off the previous resistance in the market. So resistance became support. We had a 50% retracement, and we had, again, a really nice divergence setup. Now, what I want to point out here is that you don't need retracements. You don't need to even worry about support and resistance. If you just had your prediction points on the chart, the prediction points told you, in conjunction with RVI divergence, to go long off the CP, which is the blue line here, which is, there's two types of prediction points, CPs and KPs. And there's a lot of different theories about how all this works, which you can learn about in the Day Trade Like a Pro community. But pretty much right at 6 a.m., you got two beautiful divergence setups right off the CP, and that was 30 minutes before the market opened. So you could have taken this long here off the CP, and that was it for the day. Before the market even opened, you were already in your trade, managing your positions and everything. Now, the second trade, just using prediction points and divergence, ended up being that trade that I just talked about, where it also happened to be a retracement level, but really that's irrelevant. We had a beautiful prediction point, a beautiful glaring divergence, and from there, if you missed this in the pre-market, you got this just about 10-15 minutes after the market opened, and you were off to the races. Now, as we pushed here, you notice we came up and we pushed right from to the CP. Now you can see we held the CP here, we pushed all the way directly to the CP here, and I know it's kind of hard to see because the screen is zoomed out, but we ended up touching it pretty much to the tick. We got an exhaustion pattern, which was a divergence, a bearish divergence in the bull push, and then the market kind of came sideways here for just a few minutes before continuing on. So there was a decent sell signal there that could have worked, and a lot of times it will, and it'll pull back. But in this instance, that trade did not work. But then when we came back and we tested that CP on the other side, we got two beautiful entries here that were just about a point or two below the actual prediction point. And what I argue is that the prediction point itself is a great area for entry, but you can also, you have a bit of a range of a point or a point and a half above and below it, just like you do with support and resistance, just like you do with Fibonacci levels. And so you had two great divergences lining up right there. You also had a beautiful divergence when it came back and retested it once again. And so if you missed this entry, you missed this entry, maybe you got stopped there, then you had three opportunities to then ride it. And where did it go? Right to the next prediction point. And this is what I'm talking about how powerful prediction points are. Literally every day, day in, day out, they react at these levels. And it's really the only thing you need on your chart. And so when we got all the way up to that prediction point, this was 9:30 Pacific, so 12:30 Eastern, right around lunch. We then got a nice divergence right at the prediction point that you could then potentially try short, which ended up working for 10 points to the downside. So you can see that just using one basic indicator, looking for divergence with prediction points, how successful you can be as a trader without busying your chart up with other things. This is a great example, excuse me. This is a great example of just prediction points again. Now, I want to point out that when you have prediction points that are really far apart, this one ended up being about 35 points. If you put 50% level in between them, that's also ends up becoming a very important level. So here you can see in the Globex from the night before this day that it opened on January 6th. So the afternoon of January 5th, we got a beautiful reaction off the 50%, pulled back, reacted right off the CP. And something else about these prediction points is, remember, these levels are all on here before price ever came over here. And when you have a number of them stacked together, it's telling you there's a potential for the market to kind of chop up in that area, maybe even go sideways. So the reason I did not mark the entry to go long off of these other levels, because there actually were divergences on every test, and it stair-stepped that one, then that one, then that one, and then finally came here. The reason is, from a risk-reward standpoint, if you know that this could potentially be a chop area, if you take a long off this, say the second one where I think we got a signal, you then have to keep in mind that the price could potentially chop around here, and your stop should really go way down here below all of it. So why not wait until it comes down to the final level to look for a signal? And if you get the signal, try it there with very small risk. And that ended up working here with another divergence, pushing all the way right to the next prediction point where we got a reversal signal, pulled back. And so you can just see how these levels, which were on here beforehand, really act as a nice roadmap for the day. We bounced around between these here. And then once we finally pushed where we got another divergence, we pushed all the way directly to the next prediction point up here. Got a pullback, also had an exhaustion pattern, pushed right up again to the next prediction point with another exhaustion pattern, and then we pulled back. And so then you can see this reaction directly off the 50% between the two wider prediction points. It bounced pretty much directly off that level, found resistance at the prediction point, and kind of bounced around between them, pushed just a little further past it, and then we were back off to the races to go back up. And then coincidentally, we found a nice resistance. You can see the nice bar here, or the nice wick, right into the prediction point and pulled back. So these levels are really just amazing. And with just divergence and prediction points, you will be able to pinpoint entries, super low risk for potential large pushes. And then also have confidence. So if you take this long, you can have confidence that we're going to at least push to this one, if not that one and that one, so that you can go for larger targets. Now, the other part of my trading system, which I think is probably the most valuable and most powerful thing about it, is being able to use multi-time frame analysis to predict and forecast market reversals. And so using my system, you basically can forecast how far a turn is going to go in the market. You're going to be able to forecast where you're going to have just smaller market rotations throughout the intraday market, and then those larger market reversals that go for 50, 100, 200, 300 points. And really what it comes down to is what range you're looking at in your multi-time frame analysis in order to really determine how big of a push you can expect from the bottom of a move. Now, I have some examples here of what we were able to do. And so on January 31st of this year, back at the beginning of February, just using my trading system and looking at multi-time frame analysis, we forecasted a large push higher, and that push ended up going for, I think it was like 250 ES points. And so let's say you got in, even if you got in late, you still had hundreds of points to get in and capitalize on. Now, and I actually made a video on this day. I think it was either on the 31st or February 1st. I made a video saying exactly this, that we had strong indications of a bull push coming into February. Now, February 16th, so that was February 1st, essentially. February 16th, I don't know if you guys remember, was basically the all-time high in the market at that time. And just, again, going through my analysis, I'm doing the same thing I do every day. Using the same stuff from that forecast going higher, I then started to see really strong indications that we were going to have a significant pullback. And sure enough, from that point, we pushed down about 200, I think it was like 250 points down. And then at the end of February, going into March 1st, I then forecasted, and I made a video again on February 28th or March 1st, I don't remember, where I said we have some really significant indications that this market is going to push much higher. And just to be, I didn't want to put every picture perfect 200, 300 point push. In this instance, what happened was it only pushed about 75 points. And I say only, it's kind of funny. I mean, 75 point push on the ES is still a very significant push. You can make a lot of money in that push. And what happened was it pushed on March 1st about 75 points from when I announced this. And then the market had a significant sell-off to go just a little bit further from the point when I made this call. And then we got the rotation that went over 300 points. So just almost nailed it, got a little bit more of a pullback, and then it went. Now this
Justin, can I just jump in and say one thing here?
Yeah, sure. Go for it.
I think it's one thing to say that you forecasted that and then it pushed that far, but I think the other thing that's at least equally as important, if not more important, is that not only did you forecast that and then it moved there, in most cases you had targets I'm not saying you started off saying, look, we're going to push 200 points here, but as things developed and as it went on and you knew it was a strong signal, you had targets as the market was moving there.
Oh, yeah.
And I mean, sometimes you're getting pretty damn near the top or the bottom of those moves.
Yeah, and that's a good point. Is not only do we have then targets from that area, but we have the opportunity using the system, using the prediction points, using divergence, um, to then enter. So we have this bias now, and this is kind of what we do in the trade room, and we'll get into that. But we have this bias now that's really strong for a certain direction, and now all we have to do is wait for a pullback, wait for a really clear entry, and then start riding that wave. And that's exactly what we do every morning in the trade room. So this final example is something that, remember, the trade room has only been open since March 8th. So it's literally, we are at the 1 month mark in the trade room. And so on March 25th, anyone who's in the room will definitely confirm this. And we have obviously the written record that morning. But we had a pretty strong bull bias coming into the open on the 25th. And from that point, it never pulled back and we just pushed over 200 points. And that was as of Monday when I put the presentation together. It did end up pushing just a point or two beyond that yesterday, and then we got the pullback, and we've been sideways now on the S&P. But yeah, we had the bias into the open on March 25th, and then that led to a 200-point push. So overall, this is the most powerful part of the system. And if you could just nail one of these, you would have a great month, if not a great year. So this is a good segue to get into the trade room and just talk about what we do there. So we meet every morning 30 minutes before the New York Open. So for me, that's at 6 a.m. on the Pacific. And what we do is we do a pre-market analysis using my system and some of the multi-time frame analysis. And we're able to build a bias before the market opens in the morning. And on the mornings when everything is clear, and as I say, the stars align and we get a really clear signal, we then can pretty much forecast what the market's going to do into the open. And I know there's a few people that are in here right now who were in the trade room and can vouch for the fact that I would even argue it's something like 70-75% of the time we are forecasting the move. Now, whether we're able to actually enter into the move as it's happening, that's a different story. Sometimes we don't get a clear signal to get in. But if you were to just get in and start adding to a position with that bias, more so than not, we are forecasting the move and you could catch it every morning. Now I'm streaming my charts, so you see everything I see on my end, and I have a slide showing you that. But it'll just, it'll be my charts. You'll see all the indicators or the one indicator, and then you'll see the levels that I'm marking and calling out and any type of analysis I'm doing on the chart, including identifying those divergences and fib retracement levels and all that. And of course, the prediction points. So we spend the first hour and a half of the day identifying all the important levels, all the important signals that we want to take, and we take trades based on the JTF trading system. So essentially what you're getting is kind of like a live trade coaching every morning for 2 hours. And that's why I think this is probably one of the most valuable trade rooms that's offered right now out there, because I know that there's even trade rooms with, who's that big price action guy, Al Brooks. I've heard people who have been in Al Brooks' room, a guy who's been trading for 30 years or whatever with a very robust price action trading system. And they complain that half the time you can't even see what he's trading or anything. And in this room, we are actually calling out everything that we see. So you're literally kind of hearing my stream of consciousness of what I'm seeing, of what levels are going to be good, where we should be entering, all that kind of stuff. I know there are other trade rooms where a guy will just give you a level and he'll tell you to take that level and take it to here. That's great, but the whole point of me doing this trade room is not for you to just copy me. It's for you to develop as a trader so that I'm teaching you how to fish. you know, it doesn't hurt my feelings if after 3 or 4 months you already kind of understand it and you move on. The whole point is to teach you guys how to trade and to guide you and to essentially be giving you 2 hours of mentoring every morning on the market. So in addition to the real-time analysis,
if I could just add to that too, I think that's one of the key things that you teach in your course as well. And I know, you know, I specifically took your course and it was extremely valuable for me. And what I got out of it was really understanding every detail of your system, how you identify the levels, how you identify divergences, how you can put that together with multi-time frame analysis and use that on my own if, you know, I'm not sitting in your room every morning. So I think that's a really great point about your room and your course that you share with everyone. And you know, that's the important part. You learn how to fish, you learn how to trade, not just, you know, sit and copy someone like a monkey can do.
Yeah, I mean, that's the problem is, great, you copy a guy, you might make some money. What happens when that guy moves on? What happens when you don't have access to him? Then you're just, you know, a fish out of water, right? And you're just kind of, you don't know what to do. So the idea here is to develop you as a trader and get you to the same level that I'm at so that you can capitalize on these moves. Now, my course, really what ended up happening just maybe a year ago, 6 months ago, is I was telling a lot of people, look, I have a really good system. I have a track record. I was actually making videos on YouTube and kind of doing pre-market analysis, and then almost every morning it was coming to fruition and working. And I was like, I really need to get this out to people and have other people benefit from it, because it was kind of boring out there just doing it on your own and having all these awesome gains, and you know, nobody else is there. So the reason I did all this, the reason I put this course together, and 100% why I wanted to do this trade room, was because I wanted to get this out for other people to follow, because it is really, really powerful. And the course itself is going to go into all the details of all the parts of the system, starting from the most basic part and then building up week after week, so that at the end you have a really comprehensive system to follow. And then if you want to then continue learning that system, then we have the trade room where you can watch me actually implementing everything that was in the course in real time on the real market. That's another problem I have with a lot of courses, is you take a course and it all makes sense. He showed me all these awesome setups, and then you sit down to the live market and everything's moving, and you're kind of like, you're like a deer in headlights. You're not even sure how to implement the system. And so that's kind of why both the course and the trade room kind of have come to fruition, is to kind of offer something in the trading market that's really going to help someone. It's not just, we're not trying to sell a course. In fact, the course is fairly cheap. The room is really cheap considering all the value. We're not trying to make money. I really would like to get a number of traders in this room, and we can all work together. And you'll see what I talk about. We'll get into that in just a second here, of how we can work together, so that we all can basically have our eyes on the market, watching the same thing and capitalizing on these really big moves. So in addition to the analysis we're doing in the room, the education, all the forecasting, I will show my personal trades. And I think that a lot of people in the room can attest to the fact that if you were to just follow every call I'm making, telling you where the market's going to, where it's going to bounce, if you just took all those trades, you'd probably do 10 times better than just the few live trades I place, because I'm super conservative with them. And so, you know, that's how that goes. I don't want people to just sit and wait and listen to me telling you what the market's doing, and it's doing it, and you just wait for my trade. I want you to have a little bit of autonomy and be able to now start to implement exactly what I'm saying and following the system. So the idea is not to just come in the room and just take every trade I take. I want you to actually be able to follow the system. So in addition to the room and all that, we also have a multi-time frame alerts channel. It's just a text channel, and that's where we can put notifications when we get the setups for potential larger market turns. And I said big and small here on here. I mean big being like those 200, 300 point pushes, small being, 10, 50, 75 point pushes. And we'll get into that in a second. I've already have a few people that have contributed. So this channel is not just for me. This is for anyone who has eyes on the market, who understands how the system works, to go ahead and notify everyone when they start to see something setting up. And in addition to that, we'll also be meeting once a week, and we'll do like a 1 hour-ish study session. I say ish because sometimes it could be a 45-minute session. Sometimes it could be 2 hours. It really just comes down to how much participation we have, how many questions we have, and things like that. And basically what I do is I go back through the week. I look for the best trade setups where we have the best confluence, the best multiple time frame setups, and we just cover them so that your eyes can get accustomed to these setups and you can start to identify them yourself. So this is exactly what you will see on your end visually. You will see these two charts. It happens to be my 1 minute and my 512. And you can see we tried a really aggressive long here on the 512 on this pullback to the KP on Monday morning. That just did not work out. And I told everyone super aggressive, not a lot of confluence, but worth a shot. And then finally, these two here were beautiful entries, barely any risk, that again pushed up to, I think, 40.70 that day from about 40.45. So, 25, 30 point trade, not too bad. And what I do is I then pull over onto this screen my higher time frames if I'm doing analysis with them. Maybe I'll pull over my DOM from one of my other trading accounts so you can see a trade that I'm entering and things like that. So anything I want to broadcast will be on this screen. But pretty much every morning you're going to be watching the 1 and the 512 here. And you can also, if you don't have RVI and you're really interested in just following that, you can pretty much just watch my chart and look for the signals as they're setting up and as I'm identifying them myself. And if you don't even want to do that, you can just listen to my voice and I'll be telling you there's a setup coming here. I've got divergence on this time frame, that time frame. And so you can follow along just audibly if you don't want to actually watch the charts. So I did want to run through a few examples because I'm sure there are plenty of people that are wondering, well, what's the track record so far? What calls have you made? How good have the calls been? And again, I do want to remind everyone, this room has been open for literally exactly 1 month now. That March 8th was the first day. And so these are just a few examples. On the 19th here, this was literally text that I took out of the room after I wrote up the recap for that morning. And I said a bit ambiguous into the open until we broke below 3,900. So main reason I put this one up is we did not have a clear bias that, pretty much 100% we can expect a push this way or that way. In this case, we had a set of conditions where we said if we broke below this level, then we were going to start to have confidence in a specific direction. And so in this instance, we said that once we broke below that, we were looking for shorts off of that level to go down to 38.74. And so that was a level I identified. And sure enough, the market went from right around 39.01 or whatever the push was, just above 3,900, all the way down to 38.75. So a 25 point push down, we were off by 1 point. And remember, this was not necessarily an entry long. This is our target. And I tell everyone in the trade room, if you're looking for a move to a certain level, take your contract off a point or two in front of it just to ensure you get filled and to ensure that you don't have this situation where it comes a point away, a tick away, and goes the opposite direction. So once it bounced at 75, the next thing I said was we're now looking for resistance on the push back up right around 96.50. Well, the market ended up pushing to 97.50. And then for 5 minutes went sideways and stayed below that level and then continued to push. So you had plenty of time to get out of your position if you were long from 75 for another 20 points. And then we had 3,950 and 39.08 as our next area of interest. Now, this is another reason why I wanted to share something that was not 100% perfect. I don't want you to think that it's just like every single call is spot on or within a point. In this instance, we were looking at 3,950, which was that level from earlier, and 3,908, and the market made it pretty much 50% between the two and didn't get really close to either of them. So that one did not work out. But I did say on that pullback, when we started pulling back from 0350, I said along at 38.98 made a lot of sense. And to make sure you took it with tight risk, the market bounced off 38.98 to the tick and pushed for another 6 points. So you could have grabbed, for me, I like taking 5 points as my first exit. I typically go in with 3 positions. And so I'll take the first position at 5. So I would have gotten that first position off. And then it did end up coming back. And that was basically it. That was a Friday. And for me, in my live account, I ended up taking 16 points. And then, like I said, I could have probably got a lot more if I let my runners go. But overall, not too bad for a Friday with the most conservative setups that I took. Here's another example. This is just another few days later. We had a slight bull bias, so it wasn't extremely strong, but overall, we were looking for the bull push into the open, and we were looking for resistance at 39.24. The market pushed literally right to 39.24 and then reversed. Now, on the pullback, we definitely had a few small stop outs because on that pullback, there were definitely 2 really nice key areas where we had confluence where it made sense for the market to pull back to and bounce. But the market, if you remember back to that day, got to 24, and then it was just like kind of like a bloodbath all the way down, and it just blew through everything on the chart. So when we bounced off the bottom of that range, and after we had ballooned through all that, I then said, let's look for resistance at 39.20 because it made a lot of sense. The market ended up going to 19.50, pulled back just a little bit, then pushed to 20.50, just 2 ticks beyond that, and then we had a major sell-off again. And then on that sell-off from 39.20.50, I'm not joking here. Everyone in the room can confirm that 06.50 was marked on the chart as a really important level, and the market pushed directly to 6.50 and then pushed another 25 points going into 8 a.m., which is when the market, or when the trade room kind of closes. Now, I do want to point out that I stopped my narrating and my calls at 8 a.m., but I'm still streaming that 1 minute and 5:12 chart that you can watch. It'll have all the levels marked on it. And if I do have a chance throughout the day, every once in a while, I might jump on and make a comment or type something in the chat. But I do try to keep those live stream charts going for as long as possible. Now, the next day, remember, that's now the 25th, the next morning, we had that really strong bull bias going into the open. It ended up, pushing a bull push into the open and ended up going for over 200 points after that morning. And so you can see this is like back to back, 19th, 24th, 25th, 29th. I mean, I'm not really not cherry picking here. These days really go like this. And it kind of worries me that I'm sharing this right now, almost because I feel like I'm jinxing myself, or now the pressure's on to perform tomorrow in the morning. But I got to be honest with you, I'm just following the process of my strategy. And really, that's it. Just follow it every morning, back in the office, doing the same thing. And it just works. There's a great edge to what I'm doing. So on the 29th here, just a few days ago, again, we had a bullish into the open off 42. And I said, we're going to have resistance either at 56, and if that doesn't happen, 61.50 to 63. In this case, it was not spot on. So little pressure off my back here. I pushed to 60.75. So, I mean, kind of in between the two levels we were looking at. And then on the pullback, we were looking at potential support at 49 and 45. But I remember mentioning this in the room, and I had it marked on the chart. 39.34 was the main area we were looking for. I just said that there could be a potential for there to be a reaction at these two levels, but ultimately 39.34 was the level. And sure enough, market pushed to the tick to 34 and bounced for 11 points. And so that's just another example of what happened. Now I have one more example, and then I'm just going to get into some other things regarding the trade room. I don't want to be boring you here, but I'm really trying to show you that, I mean, we've been looking day after day after day. I'm not cherry picking these calls. Today was clear, very strong bull bias into the open. This is that Monday example that we've been talking about with our first target at 51. I said there's a small indication of a pullback and look for long at 33.75 if that did happen. That did not happen. And then it ended up just as we pushed up to 51, we then got a pullback to that KP that I was mentioning earlier, said to take it long at 43 and then take it at least to your first position up to 51. Now the market ended up pushing all the way to somewhere around 64, but the first area that we were interested in was 51, and the market pushed directly to 51 to the tick again, and then had this really violent 5-point pullback. I don't know if you guys remember on Monday, right around 7 a.m. Pacific, got right to 51, and then within a matter of literally a second or two, pulled back 5 points from that level. And so here's a picture again of that morning. There's the long off of the KP at 43. Here's 51 marked on the chart ahead of time. Market went right to it there and pulled back. And so this is the type of stuff that we're doing in the trade room. We're building the bias before the open so that we can determine if we can expect a push up or a push down. And then we're looking for these entries using all the things in my trading system. Now, just to kind of finish things out here, I did want to feature the multi-time frame alerts channel. And you can see that this is not just a channel for me to put entries in. We have a great trader here at the Day Trade Like a Pro community. I won't give his full name. I never asked if I could get permission for that. But he goes by WN on the Day Trade Like a Pro server. And this guy, I'm telling you, I think he's been trading for less than a year. And when I talk to him, I feel like I'm talking to like a professional trader. This guy, and he's just been, I think, with Day Trade Like a Pro from the beginning, has just turned into a phenomenal trader. So he went in here on March 14th, and he mentioned, I believe this was kind of in the afternoon, maybe even at night. He said, I have some bearish divergence on the 10, the 30, and on the daily. Now, I did not see that signal. I think it was maybe 7 or 8 o'clock or something. And then I ended up not seeing it until I got up the next morning. And so you can see here in the other chat room, I said, nice call. It ended up dropping 14 points from when he made the alert. So if anyone was following and they saw that, maybe they were sitting at their computer at the end of the night, they saw that, they could have looked for a beautiful entry to take it short and gotten at least, maybe they got in a little late, maybe 5 or 10 points. Not bad, especially on a nice free trade alert. And so the reason I have this in a different chat is because the multi-time frame alerts channel is just for the alert. Then we have another channel where we can talk and share things and stuff like that. So that's where I mentioned it here on the next morning on the 15th. Now you can see the next call was then 2 days later on the 17th. And this happened to be, I think, right after. So the trade room goes until 8 a.m. And right at 8 a.m., we bounced off 25. And I wasn't really paying attention to signals at that point. I was doing a recap for the morning and then going to do my jog and all that fun stuff. And so when I came back to the charts not too long after that, I noticed this huge confluence. And I'm talking seeing things all the way across all the time frames, all showing me this market reversal signal. And I said we were up 15 points from that 39.25 level, and we were back in that AM chop zone. And so I'm going to go to the next slide here. And so here's that low at 39.25. We did coincidentally have a level at 24 marked. So just in front of that is where that turn occurred. And like I said, I had a buildup of a number of signals telling me we were probably going to have a significant push higher. And so right around 9 a.m. when I got to the charts and saw that, I let everyone know in the chat room that we have the signal. We were 15 points up from where it formed, and we were back in, if you look back here, all this stuff over here was all the chop from the morning session. And so I said we were back in the chop, but we had that really strong signal. So you had an opportunity in this area to find an entry. And from that point, we then end up pushing. Like I said, I think it ended up being, I don't know, 200 points, but at least in this immediate area, you had like 40, even if you got late. Maybe you played the breakout and you didn't get long until you broke above 39.40. I mean, this went all the way just in front of 39.80, had a pullback, and then I think it continued going. And so that's kind of how that multi-time frame alerts channel goes. And I will be honest, there's not a lot of calls in there because typically I'm doing other things. I have other people that I'm working with as far as coaching and other things in my life. So in the afternoons, I'm not necessarily here every time. But this, again, is a key why I want other traders to also contribute. And so if you start to understand the system, you can add those alerts, and then we can kind of multiply how many times we do get these really high quality calls. So that's kind of everything in regards to the trade room. Again, going back to the underlying strategy between it all, or behind it all, I do have a course that's a 4-week course with 4 1.5 hour sessions and all that. So you can learn the system in and out. And then if you join the trade room, you can see how we're actually trading it and really applying it in a real life scenario. So we are going to go ahead and offer everyone a free full week in the trade room so you can try it out. And then from there, hopefully you'll go ahead and sign up and join us. And I think we could really get a really strong trading community here and really create some very successful and profitable traders. And so you can see here everything we've been saying. You'll see my charts. We'll do the pre-market analysis. I'll make trade calls. You will be able to see some of the trades I take. There'll be obviously the education, and then we'll have that weekly study session to talk about the best trades of the week. And then it's basically a free-for-all. If you want to spend 2 or 3 hours asking me questions or whatever, we can definitely do that. On top of that, you have that multi-time frame alerts channel. And so if you are interested, I think after the webinar, you're going to get a recording sent out to you. I think they'll even have a link in there for you to get to the spot where you can sign up for the trade room. But if you can't, there's the address right there. And so I really look forward to getting a bunch of people in the room this week and maybe into next week and really get this going here. In addition, remember I've been mentioning the course. We have the 4 90-minute training sessions. And then in addition, because like I said earlier in the webinar, I don't want to just show you theoretically how things work. I want to show you how it will work on the actual market. So what we did was we did 4 60-minute live trade room sessions. So we had a 90-minute session that week, and then on another day that week, we went on the live market and tried to see how we could apply it as the market was moving. And we did that for 4 weeks. So you'll have access to all 4 of those. And then you'll then have basically a one-on-one call with me for about an hour where, it's basically a coaching session, but we can go over, anything you want it clarified in terms of what you learned in the course and anything trading related. Now, the other thing what we're doing here is if you do sign up for the trade room, and not just for the free trial, but you actually sign up for a month with us, we'll give you 25% off the course. The course is already pretty cheap in terms of trading courses. There's people out there asking $5,000, $10,000, $25,000 for their trading system, as if it's this amazing system that's going to, give you the world. And to be honest with you, what I have to offer you here today, even if you were just to spend time with me in the trade room, is going to be just as powerful, if not more. So we've got that going. And then finally, I do want to point out that I am available for coaching if you would like, although I do want to kind of point out that I'm not looking to get 5, 10, 15, 20 people coaching. I don't have the time for it. I'm already helping some other people, and I've got other things going on in my life. I also want to trade myself. So if you're really, really interested in working with me, you like the system, you're really in it for the long haul, and you want to be a successful, profitable trader, and you're aware of the fact that trading is a journey, it's tough. There's going to be some really sad days. There's going to be some really ecstatic days. If you're willing to push through all that, and you know the challenges of trading, and you want to work with me, we can jump on a phone call and just see if it's going to work between us, and we can go ahead and set up coaching between you and me. But it is, you know, a limited basis. I'm not sure how many people I can really take under my wing right now. And so that's really all we have today for the presentation. I'm not sure if maybe Dave or Ephraim from
Yeah.
Day Trade Like a Pro have anything to add.
No, well, first of all, thank you so much for that. I think that was a really great peek into your system, your methodology, the course that goes through that in detail. One thing I want to clarify on the course is that it's an on-demand course. So we did it live and we recorded everything and had some professional video editing on it. And so it's now an on-demand course that you'll get access to for life. And you can go through it at your own pace, and you can rewatch the sessions. And the great part about it is it's cumulative. So the first training session has a follow-up live trading session that's recorded to demonstrate the principles. And Justin really does an outstanding job of building the foundation so that you really, truly understand the system. And I think that what you'll find is as you do the live trade room, you're going to also really benefit from understanding the methodology and his system behind it. It's going to make you a much more effective trader. So I have posted in the chat how you can sign up for the live trade room. We will post, though, you guys will all get an email with a link to sign up to the live trade room. And then the way it's going to work, if you want to access the course as well, as soon as you sign up for the live trade room, you'll get a follow-up email with a coupon code for the discount on the course. So sign up for the live trade room. If you go to that link, you'll see there's an option to select a free trial for 1 week. And then as soon as you sign up, you will get the coupon code for the discount to the course. And if you have any questions or any issues at all whatsoever, you can always email support@Day Trade Like a Pro, and we will be happy to help you out with that.
Thanks, Dave.
So
I hope that you guys got something out of this. I tried to spend a lot of time showing you pretty much what I'm doing with identifying divergence, identifying levels, using prediction points. So you should be able to have some actionable things you could do right into Globex, try to apply them to your trading. And I really do hope that I see a lot of you in the trade room this week into next week. I don't think you're going to be disappointed with everything. So with that, I think that's it.
Yeah, we'll wrap up. Well, thank you very much, everyone. Look out for the email recording so that you can watch this again and really get the full benefit of it. And we'll have all the offers in that email as well if you guys want to try out the room or the course as well. So thanks again, and we'll see you in the room. Oh yeah, actually one other thing too for the trade room. Justin, you're doing your first kind of study session tomorrow, right? So if people are going to sign up, they should probably get in so that they can be part of that study session for tomorrow.
Yes, there'll be one tomorrow, but then I mean there will be one next Thursday as well. So if you sign up on Monday of next week or start on Monday of next week, would then you would at least get the one next Thursday as well. So however you want to do it. I do also want to point out there was one thing I was just going to mention that kind of just slipped my tongue now. The indicator itself, it's custom only because I have the lines drawn on there. If you need that custom indicator, just shoot over a message to us on the Day Trade Like a Pro platform on Discord.
And just one parting comment just for everyone. There's been a couple of comments coming in about prediction points and what they are and all that. I really strongly recommend anyone who has any questions about prediction points or trading them, the strategies around them, etc., ask them in the Discord channel. There's a question and answers channel, there's an ES channel, there's an NQ channel. ask them there. I think what everyone's going to find is that the community here with Day Trade Like a Pro, I mean, traders trip over themselves to help you. So if you have any questions around those whatsoever, be active, engage those questions. If you have that question, someone else probably has it. So you're actually being a pretty good contribution to the community as well. So thanks again, everyone. Appreciate your time. And with that, we're going to wrap it up.
Thanks, guys.